What is going on, everybody? And in this video, we're providing a state of the market and stock picks for August 30th, 2022. So if that sounds like something you're interested in, consider subscribing, as we do provide daily and weekly updates to get you prepared for the day in the week ahead in this glorious market. Now, state of the market, there are a lot of different things the market is waiting on. We have to see where inflation is at. That is where the market is being led by. That is what's navigating the market right now. Do we have inflation under control? Powell seems to think that things are going to get a lot worse before they get better. We have to realize that we came down from a 9.1 to 8.5, but Fed is aiming for a 4% throughout all of next year. So leading up to that, I suspect that the Fed will come in with at least probably two more 75-point basis moves before the beginning of the year, before the new year, and that will hopefully take down inflation to some extent, at least closer to the 4% that they're aiming for. You have to realize that it's been very historic that we went back-to-back 75-point basis moves. You also have the ECB. Their monetary policy comes out on the 9th of September. We do have EA inflation numbers on Wednesday morning, is what I've been referring to. That's year over year. So we're trying to see where that stands. I think the market could be swayed, or that could have quite a bit of weight on Wednesday morning. That's pre-market, 5 a.m. Eastern Standard Time. And then you also have, like I said, non-farms on Friday, which could give us insight into where the employment situation is. I think right now, we're still very early signs of those things when it comes to employment. We've seen a big boost in employment numbers. But a theory is that the reason why those numbers have been boosted is not so much that a lot of the workforce has come back. It's the fact that inflation has been getting out of control, and some people are picking up an extra job or two to try to combat inflation. And so with that being said, the market is really iffy about putting risk on right now, because there's too much uncertainty what's going on. The market likes to know at least a couple months out what's going to happen, and right now we really don't know. Again, you have the ECB who raised 50-point basis move, coming in thinking they're only going to do 25-point basis move after not raising rates for about a decade. And then now they're talking about a 75-point basis move coming into September, which is very concerning. There's some other news that came out today as well about that the ammunitions supply for the U.S. is getting low because of Ukraine. So much so that the Pentagon, I guess, has made comments about it. I don't know how much weight that's going to have, but that's definitely not a good thing. So we're going to have to see how that plays out. That could be one of those small things that could trickle into have a bigger butterfly effect in future events. But we're going to have to see exactly what does happen there. But with that being said, you have now as of right now, we don't really know where we're going to go. But as you can see, technical wise, we did sell off heavily after Powell. We are starting to sell off into close. I think the gaps that we are getting are coming overnight and not so much during the day. Or we could be potentially just playing a range at this point and kind of seeing where we go from here, because we don't know. We don't know if we've hit peak inflation. And even if we did hit peak inflation, we wouldn't know for a couple months out. Yes, we need a bigger span to understand where the inflation is really sitting at. But even still, even if we realize it's coming down, we still need to get to roughly around 4%, which we are far from it right now. Without all that being said, we're going to get a lot more chop until we get some answers. Maybe the non-farms will help us. We are essentially out of earnings mode. We got a while before we get into the next earnings mode for Q3, which I think would be pivotal. We'll start to see, especially if we get another 75-point basis move, Q3 and Q4 are going to be important, especially when you start stacking these rate increases and trying to determine where we're at and being stuck in between the Fed and fighting inflation. Um, so we'll have to see. We'll have to see again. The headline inflation is really what's been driving things. Energy has just been going through the roof. There's even talk of energy shortage on a lot of different things. We already know that Germany was close to 2 months supply of gas, and they're uncertain. Now, yes, we can be swaying things here and there and dipping in reserves, but that's just temporarily patching problems. And if something doesn't unfold the correct way, it could get really bad. And so, with all that being said, I'm not trying to doom and gloom here. I think you should be neutral to some extent. Have we reached the bottom? Is the question I always get, and I don't know. Things could very easily spiral out of control and start causing us to sell off heavily. Um, just with the energy concerns, just with potential layoffs, more layoffs, those kind of things, they take time to play out. They're not an overnight thing. And so you're seeing these things, and things I talk about are not an overnight thing. This is why you get these temporary rallies. Like I said, there's no new news. While the overall thesis of everything is bad, in its earnings mode, the market's going to run up and try to build margin because it doesn't want to continue to just keep crashing down, right? It's just designed to go up. And if there's gaps in between on where we know that, things aren't going to come down, then it will try to take advantage of that. So with that being said, let's get into some technicals here. The market general sentiment. This is something I'm getting pulled up. This is one thing I didn't really like, but the thing is we didn't have enough bad news to really feel this faster down. Normally the setup is pretty bearish, to be honest. So when you start having the 20 and the 50 EMAs, especially on the daily, normally you get a retest. You tried to retest and it was really slow. But normally when it does retest, this thing flushes pretty heavy. I said we needed a pullback. I think we could potentially head down to that 3,800 is kind of what I'm looking at. Again, if we're trying to price in a 75-point basis move, I'm sure we could potentially get down to that 30, roughly around that 3,800. Maybe it's 3,850 roughly, 3,825, 3,830. So kind of watching that area for where we're headed right now. Again, we're out of cycle of earnings. We're getting a lot of like negative news and data coming out. I think we could potentially land here. Now that would still put us at a higher low if you're judging this as a higher low. But ultimately, being said, I mean, it could be a higher or lower high up here too. Again, if you're looking at it from the other angle. But again, we have to see where we land. And like I said, I have kept reiterating that this could be the dip to buy. But again, it really just depends on where we're sitting. Again, the stock market is not, it's not the economy to some extent. It could rally in the world be in a really crappy place, which it has been, and it has rallied, and we've seen that. So really watching this dip and seeing where it goes. But again, tomorrow, I'm looking for some sort of a fueling leg down. Again, if we get fear recession, I think people are kind of getting numb to the recession talk. I think people kind of believe we are in a recession. The question is it going to be a prolonged recession? There's been talks that, the ECB and everything are going to be in a prolonged recession, which leads to a depression. The world look like it's leading into a global depression. We've already been in this so-called recession, however you want to define it, for roughly about 2 months or so. And so, I mean, you really won't be able to know until overall, once everything is said and done, once time has passed. But with that being said, if it goes longer than 6 months, then we start getting a depression, a global depression. You start getting more demand destruction. You start getting deflation, stagflation, people just not wanting to buy because of what's going on. And so with all that being said, we have to see where this lands. Bitcoin, again, it's going to move along with the market. If the market's going to sell, so is Bitcoin. Really testing the support of 18K 500 here. If it does break that, going to get in some trouble, I think, and going to see some 15K, maybe even 10K. I mean, anything's a possibility. I mean, this thing can flush all the way back down to 5K or zero, right? It really doesn't matter. I've always talked about building a new base, and this could be the bottom. I don't know. Time will tell. Normally, this is why I do day to days, because day to day you can kind of understand, especially with a price action, if it's picking up, if more volume is coming in. You can kind of see that stuff during the day, where after the fact, you can wait to see the move happen first. But typically, you can see some buying or selling come in heavily throughout the day if you're watching charts. But we'll see with Bitcoin. Again, I'm not saying I don't think it's not the future and all that. I do believe in all that stuff. But the thing is with me is it's the market's going to dictate where everything's going, overall market sentiment. And it's not great right now, but it's not saying that the market can't push up. But we have to see how bad it's going to get. There could be another initial shock, that recession, and the really bad parts about that, and it could cause the stock market to sell. We don't know, but we're going to have to see. So with that being said, I'm going to go over the general industries again. I think this is important, just kind of see what's going on. Also, when I give the numbers on the weekly update, that kind of bakes in what the averages are. Like in the weekly update that I was talking about this past weekend, I kind of talked about how there was a bigger price increase in the SPX. They're expecting a bigger move on the general index. It was normally been sitting around that 80 mark, and now they bumped it up to 110. So that shows you that they're trying to price in a bigger move this week. So whether that's the EA statement on Wednesday, or if that's the non-farms on Friday, and typically the non-farms could move the market pretty well as well. So we're going to have to see how we play out. Now, BA, again, looking like the market, they get a little bit sell off. It's holding better. Value is holding better, but we don't want it to break the 158 mark. If it does break 158, this thing could really start getting some gas at the downside. Or if it breaks up over the 175, could start heading back up again. Again, everything on the daily, typically aside from value here, but most things aren't looking too great. Even like chips. Chips have been rolling over really heavy. Again, they had bad forward guidance, and so we're going to have to see. And you still got all the stuff with Taiwan going on. There's a lot of threats and stuff there. JPM, again, holding here. We don't want it to break the 112. It's going to put us back into this channel. Something I've talked about. These breakouts just aren't working. They're failing and coming back down. So it needs to hold that 110 mark. If you can't hold that, again, we're going to be in some trouble. Get some more selling, or we could potentially push up. Again, you got the 124 mark at resistance, and then you have some bigger resistance here at the 130 mark. I really don't see banks ripping up like that anytime soon, especially being out of cycle and a lot of the bad news that has been coming in. So that's pretty much what I got. I don't want to make this video too long. Again, there's not a lot, and I do talk a lot, especially about the market sentiment, and trying to set everything up and paint the picture for you. But if you've made this far, I do appreciate you. Go ahead and drop a like button. Until next time, I'll see you guys later.